going on, ladies and gentlemen? I'm going to be answering a question here that I got from Roger on our last video yesterday. And the question was, so are naked shorts just the creation of an IOU in your account? And I wanted to clarify on that because it seems like people keep asking me this question. And it's a very good question, but the fact is that the creation of, what's going on, buddy? Welcome. The creation of shares in a synthetic format through naked shorting is literally dilution. And it's dilutionary from the person, or should I say the entity that's naked shorting them. Whether that be a market maker that is legally allowed to naked short a company, whether it be a hedge fund or a family office or a prime brokerage, etc., that is creating shares that don't exist by naked shorting, which, for those that don't know, that means selling you a share that they haven't borrowed and then failing to deliver on it would be the completion of that naked short. Because if they don't deliver on buying the shares that need to be returned to you, if they don't borrow the shares to return to you, that creates synthetic shares in the system. Hey, Candace, it's great to see you as well, my friend. I hope you're doing well, thankfully. Pokemon Native, Cash Money's doing okay, you know. Huge shout out to Cash if you're watching this right now, and the whole family. Tyler, welcome, my friend. It's great to see you, everybody. I see you guys, ladies and gentlemen, down there. So I wanted to let everybody know that it's dilutionary in the sense that it creates shares, and it's not an IOU in your account. You actually get the shares in your account in the forms of ones and zeros. The share was not authorized by the company. The share was created illegally by a hedge fund or hedge fund or family office, etc., broker or prime broker, or it's created legally from a market maker using the market maker exemption rule 203B triple I, 203B triple I. And that means that a market maker can sell you shares that they don't have. They can sell you one, they can sell you 1,000, they can sell you 1,000,000 shares they don't fucking have. And what happens? Where do they get them from? They just reach up and grab them out of the ether. That's why Doug Sifu from Virtue calls himself the liquidity fairy. And these fucking fairies go out there and sell you shares that don't exist. And then so they get placed into your account. Oftentimes they fail to deliver. Voila. Legal naked shorting. Legal dilution of a stock with shares that shouldn't exist. And it seems that many people forget that the whole purposes of having a stock market, like the New York Stock Exchange or the NASDAQ, is specifically to be able to raise money, is specifically to be able to help the company via public investment. So retail investors buy stocks in any company, you name it, whatever company that might be. Tesla, Nvidia, AMC, GameStop, pick your poison. And the whole purposes of it is for you to own that company and that company to increase in market capitalization and to be able to raise money, etc. And that's a good thing. So when a company needs to, please drop a like, by the way, if you learned something so far. If a company needs to, they can then sell more shares to the market in order to get more funds. Like, for example, MicroStrategy is currently about to do that and possibly raise the float from, I don't know, 100 million to 10 billion shares. Do I agree with that from MicroStrategy? I don't really agree with MicroStrategy's business strategy in general, but that's neither here nor there, and that's not the point of this video. But the fact is that is something that the company can do in order to raise money so they can go out and buy more Bitcoin. That is part of the essential business of MicroStrategy. And the same goes for GameStop. GameStop went out and sold shares. They raised $4.3 billion dollars, and now they have over $4 billion dollars in cash on hand, as well as AMC. AMC has over $500 million in cash on hand and has paid off over $2 billion dollars worth of debt in the last 3.5 years. That's the purposes of the stock market, ladies and gentlemen. That's what it's for. That's why it exists. It also exists to give retail investors the opportunity to make money and to be able to go long, go short, do whatever it is they please. Hold, buy, sell, whatever. When a market maker legally naked shorts a stock, there is no benefit to the company. There is no benefit to the retail investor. There is only a benefit to those shorting the stock, to those betting that the price will go down. Do you understand what I'm saying to you? So people oftentimes get angry at people like Ryan Cohen or what's his name? Richard Saylor? What the fuck? Forgetting here briefly. Or Adam Aaron, whatever, whoever it might be, for issuing shares on the market of their company. That's the whole fucking point of the stock market, ladies and gentlemen. For companies to be able to do that. And when people get upset, at the companies and at the CEOs for raising money through a way that actually should occur, it makes me realize, well, a lot of people don't understand business. And a lot of people definitely don't understand the stock exchange or the purposes of them. Now, I'm not talking about you, I'm just speaking generally. If you happen to align into that mold, well, that's okay because a lot of people fit into that mold because schools don't teach financial and fiscal policy and education in the way that they should. So the reality of the matter is that you people shouldn't be mad at CEOs for raising money by selling stocks on the stock exchange. You have the opportunity to buy, to hold, to short it, and you can do so for as long as necessary and sell it once you're profitable. However, whether that takes a minute, a day, an hour, a week, a decade. You guys have heard me say that the one and only Warren Buffett has said, you should not buy any stock if you're not willing to hold it for 10 years. He said that. Google it for yourself. So keep in mind that it doesn't benefit you when entities naked short these companies, but they do it every fucking day. It does benefit you as a retail investor when a CEO that has the emphasis of building the company better and making the company more profitable, that does help you as a retail investor, even if you end up with fewer shares in the short term. It prevents the company from going bankrupt, and it prevents your investment from going to zero. Does that make sense? Stop being mad at CEOs that are taking care of business and selling shares occasionally in order to better the company. Start being mad at people and entities that are naked shorting stock and misreporting their trades. Citadel, JP Morgan. Start being mad at companies that let their hedge funds front run your trades. Virtue Financial, allegedly, according to the SEC lawsuit. Does this ring any bells? Stop being mad at companies like AMC and GameStop. And ladies and gentlemen, AL, everything raised over $500,000 for already, which is absolutely the first company in the history of the world to offer retail investors as an upcoming stock and crypto brokerage the opportunity to own a piece of this upcoming brokerage via the Regulation CF Jobs Act of 2012. So I would like you, ladies and gentlemen, if you want to learn more, go down to the link in the description. Because if you dislike naked shorts, if you dislike your trades getting front run, that's the only way. Sorry guys, reception's not great here. But I'm going to cut the video short here. Please drop a like if you can. I'll do another video from a place with better Wi-Fi tomorrow. Check out XCHANGE. Do yourself a favor. It's the manipulation. Have a great day, everybody. Have a great evening.